Your credit score feels like a report card for adulthood, but it's not grading your character, it's grading your profitability. You're not being evaluated as a person, you're being rated as a risk. And risk means one thing. How likely are you to make lenders money? That's the real question. Your score doesn't measure your savings. It doesn't measure your investments. It doesn't measure your financial discipline. It measures how well you manage borrowed money. If you never borrow, you barely exist in the system. No debt, no activity, no strong score. That's interesting, right? The system rewards borrowing, but only controlled borrowing. Use credit, but not too much. Carry a balance, but not for too long. Be active, but not risky. You're managing an algorithm, not just your money. Payment history matters, credit utilization matters, account age matters, inquiries matter. But none of those measure wealth. They measure lending behavior. You can have no debt and still struggle with credit approval. You can have savings and still look risky. Because the system doesn't track independence, it tracks participation. It's not about how stable you are, it's about how predictable you are. And predictable borrowers are profitable borrowers. That's why your score follows you. Loans, mortgages, car financing, rent applications, sometimes even jobs. One number, different treatment, same person, different pricing. Two people buy the same car. One pays more because of a score, not because of character, because of risk modeling. And here's where it gets strange. Pay off a loan, your score might dip. Close an old account, your score might drop. You did something responsible, the number reacts anyway. That's when it starts feeling like a game, because it is a game, an algorithmic one. There isn't even just one score. There are multiple models, different formulas, different versions. You might be excellent in one, average in another. Which one is real? The one the lender chooses. That should tell you something. This system isn't about fairness, it's about probability. The higher your score, the more offers you receive. Higher limits, pre-approved loans, better rates, more borrowing opportunities. You're rewarded with access to more debt. That's not evil, but it is revealing. A high credit score doesn't mean you're wealthy. It means lenders trust you. Trust you to repay, trust you to stay profitable. And once you see that, it feels different. You stop tying self-worth to a number. You stop panicking over small fluctuations. You start seeing it as a tool, not an identity. Because you are not your credit score. You are a person navigating a lending system. And the system is built for lending, not for your peace of mind. So is it a scam? Not illegal, not fake, but definitely structured around profit. You're rated like a product, segmented, scored, priced. And once you understand that, the number loses some of its emotional power. It becomes something you manage, not something that defines you. And that shift, that's where clarity begins. If this helped you see the system more clearly, subscribe. Not for hype, just for understanding. Because the more you understand the rules, the less controlled you feel by them.